The Westpac actually the first to predict an interest rate cut for Australia to come in December. Huw McKay, do you stand by that still?
Well, absolutely. These minutes really are an historical artefact of what the Reserve Bank Board was speaking about some weeks ago, and in the last couple of weeks a lot of things have happened globally. We really don't think that the mood of the board 3 weeks ago is particularly relevant for how they're going to be feeling in a couple of months' time. We see the international environment as particularly malignant right now with financial turmoil both sides of the North Atlantic, and really we see emerging market growth moving from strong support to only modest support for the Australian economy. And when you bring that together with a very, very cautious household sector in Australia and the interest rate sensitive sectors of the Australian economy really showing signs of stress now and the unemployment rate ticking higher, we really can't see any argument for higher interest rates and an increasingly strong argument to lower them.
When you say that you're seeing emerging markets not being quite as supportive, are you talking here about China, and are you talking specifically really about a Chinese slowdown?
Well, I'm talking about a number of things. The Chinese slowdown is part of the story. We've been arguing that China will decelerate this year for a considerable amount of time. That's coming through in the business surveys now. But India is also slowing, consequence of weaker capital inflows to that part of the world and the tight monetary policy. But also up and down East Asia, we've seen pretty soft outcomes in Q2. Some of that's Japanese disruption. But once that disruption starts to fade, we think weak growth in the G3 economies is going to actually hinder emerging Asian growth overall, ex the China story, ex the India story. So the developed markets are still important sources of demand for East Asia, and we've marked down our 2012 forecasts, and we've done so appreciably in some jurisdictions.
Huw McKay, also, I mean, just mentioning there also the role of what's really been the other side of the economy, the two-speed economy. So you're saying that, well, not just the household side, but also the mining side could be seeing a slowdown too.
Well, there's two aspects to the mining story. There's the physical construction of capacity, and that story is unambiguously positive, and we do not deny that. There is going to be a huge amount of capital spending on mining-related infrastructure over the next 3 or 4 years. That story is really not up for debate. We see the mining companies are going to look through any cyclical correction, and they're going to focus on the huge structural positives for resource demand. But that's a different story to the income effect of prices, and we do see slowing global growth with the developed markets and the emerging markets contributing to that. That will push commodity prices lower, and therefore the flows of income coming to the Australian economy via the terms of trade will be reduced. And that is going to change the parameters from what the Reserve Bank and the Treasury were actually looking at 6 months ago.
What does it mean for the Australian dollar? That's got to be hurting the economy right now.
It's hurting certain pockets of the economy, undoubtedly. There's a huge outflow of domestic travellers who are going abroad rather than holidaying domestically. That's putting a big hole in certain regions' tourism dollar. It's much more expensive for people to come here. And there's also the foreign tourist market, which is a very, very large part of our export earnings. That's also struggling with the high currency. But there's also import penetration in the manufacturing sector. So you don't have to go very far to find a hard luck story in corporate Australia related to the currency. The mining boom pushes interest rates up. It pushes up the cost of living for many, but it doesn't necessarily cascade into broader aggregate demand if fiscal policy isn't redistributing the gains. And at the moment, the budget in Australia is repairing, it's consolidating, it's not spreading the wealth, so to speak.